Good afternoon, everyone. Welcome to another exclusive interview on Stocks on the Rocks. I'm joined today by the Massey executive team. Today, I'm joined by Gervase Warner, the president and group CEO. I'm also joined by Vaughn Martin. He's our acting CFO and also the head of the gas and products portfolio company. And there's also David O'Brien, who's the executive vice president of the global expansion for the group. And I'm also joined by our Muirhead, manager of investment banking at Barita.
Thanks, Haughton. I'm Haughton Richards, and we helped Massey to cross-list on the Jamaica Stock Exchange last year. So I'm just here to just sit in, just in case you have any questions for us. Thanks.
Thanks, all. Welcome, everyone.
Thank you. Nice to be here.
So this is actually very special because Massey is actually doing their centenarian tour. This is their 100th year of operating, and I mean that in itself is just a big milestone. And we also just seen last year you guys did some major acquisitions. So, I mean, it's kind of good to have an opportunity just to speak to you guys and get an idea of what you guys are about. But in 2019, there was a major change in terms of your corporate structure, which is that you moved away from being one whole company but moving to more of an investment holding company strategy. Tell us about that. What's that? What really went into that thought process, and how has it helped you guys since?
Yeah, sure. So we've been doing some strategy work, and one of the things that we recognized is that we perpetually had businesses in the group that would be in trouble. And we'd have to go in and they distract us and pay attention to it and try to rehabilitate it, sometimes have to divest them. And in 2019, in our strategy review, we took a look at every company in the group, and we actually prepared this lovely diagram that showed the company's capital they consume and the return that's generated on it. And what we found is that we had 49% of the assets in the group not returning our weighted average cost of capital. So they were actually sort of like pulling down the overall return that we could provide the shareholders. So we said, well, listen, everything, on the right hand side of this scale, we either have to fix ourselves and focus on the things that can provide proper return. And so that was where the strategy was born, to start thinking about where would we focus our attention. We had to mentor a whole process, with all of the respective business units at the time, making presentations about, and the context of pretend that we didn't own you. Why would we want to buy you? Why would we want to invest our capital? And coming out of that, the decision was taken. We like integrated retail, the supermarkets and food and pharmaceutical distribution business. We like motors and machines, which is the car dealerships and the Caterpillar dealerships, industrial equipment, car rental. And we like gas products. Gas and energy were tied together at that point in time. And we said, inside of that, we like gas products, high return. The plants that we run, LPG businesses, and industrial gases like carbon dioxide for your beverages, oxygen for medical applications, nitrogen, which is an industrial application to purge lines for petrochemical plants, etc. We like those businesses, whatever it is. Everything else, we have to ask ourselves, why do we do it?
Okay. So I'm glad you brought Vaughn and David with you because since 2019, you guys have cross-listed the Jamaica Stock Exchange in 2022. And one of the key questions the person would have to ask is, how is the decision making done now, seeing that you have a holding company at the top and the portfolio companies all operate separately? In terms of the acquisition the guys did last year, how exactly the decision making done? Is it done at the portfolio company level and then brought to the investment management to deliberate on, or is it done different? How is it done?
Well, you should have to talk about the experiences.
Yeah, sure, I can take that. So in the gas products portfolio, we have two major acquisitions that we recently announced. One is the acquisition of Renike Trinidad and Tobago, which is an ASU, air separation unit, that produces oxygen and nitrogen and a bit of a second. And we announced the signing of the SPA with IGL, which, as we all know, in your hometown, Jamaica, well-known brand, Blue Gas in the country, and a very good business. So yeah, that the portfolios we really have a license to grow. That's kind of how I put it. it's a mandate to realize it's an opportunity. It's really fun for us. That's what we live for. That's what we do every day. So we are looking at real, I would say, transformative acquisitions, big businesses, good businesses that we can grow, we can add a lot of value to, and create more value for Massey and our shareholders. So that starts at the portfolio level. And now we have David here helping us to go totally global.
How does they come into this now with a global expansion plan? How does it fit into that?
Sure. So, well, my previous job was in the motors and machines portfolio. So I had that same experience where we would expand into, new opportunities. And one of the expansions we did was into Colombia. And we started in Colombia. We bought car dealerships in Colombia. Now we built ourselves into one of the largest multi-brand dealership groups in Colombia. And now coming out of that area and coming now back into the main office to help and to support the guys on their journey. One of the things that we picked when we picked these portfolios, we wanted to have businesses that could operate anywhere in the world, that had access to markets. And the three businesses we picked up, it's pretty simple. Car dealerships are everywhere in the world, supermarkets everywhere in the world, cooking gas, industrial gas is needed everywhere in the world. What we needed to do now is, one, capital, and we found a way to get some capital by selling off. And really we needed attitude. And I think that might be some of what I bring to the table. And with the approach, how they would like to go about selling their business. And in different countries and in different languages, even though I only speak one, I somehow find a way to communicate. But what we found, the new system of structure, autonomy, and authority being given to the portfolios is that they're really driven to do their own expansion. It's really just a matter of us finding markets that suit the portfolios.
Okay. So, question I want to ask then is there a gestation period that you guys allow for when each acquisition? Especially thinking about with the cost of capital, you can't just be adding. Synergies need to be realized to really create value for the shareholders. Is there a gestation period that you guys allow for within the portfolio companies once you do acquisition sale? The guys on the 2 last years is are do wait, or you just at this point just aggressive trying to grow it at a particular size and then you focus on unlocking the synergies across the portfolios.
So, I will take it from the parent's perspective. You can take it from the operator's perspective. From the parent's perspective, we are in a new growth period, right? So we don't have some rule of thumb that says, okay, you've done enough, you must wait for another 2 years before you can, right? And I would say these 3 acquisitions are 3 of the largest acquisitions we've done since 2008 when we bought PS&T. We've acquired a number of companies in the interim, but they've been much smaller bite sizes. So we now, Vaughn was saying earlier today, we are now sort of setting ourselves up for really significant integration activities. The portfolios, along with the main board, will be monitoring how our integration initiatives and efforts are coming along. Every one of these acquisitions had a plan, right? So we'll be looking to see how we are performing according to the plan that we had for capturing synergies and further growing the business. And I would say that it's not a magic number, but you will be able to tell from what are the issues, what is going well, what are the successes, what are the challenges, whether we feel, yep, this one is well under control, we could take on doing another one, or well, boy, this one a little kind of wobbly. And fellas, the parent would prefer that you land this one properly before we take on another big one. So that's what I say from a parent company perspective.
Okay.
Let's go on from the operator.
Yeah, and I'll add a bit of the macro to the parent side as well. So I think from a parent point of view, what we do annual review of major acquisitions. So once the acquisition, if we start from the beginning, yes, we look for the acquisitions, but we do have our portfolio board has a criteria at which point we have a minimum value that is allowed, maximum value allowed. and then it must come to the holdings board for approval.
Okay.
Yeah. So once those major acquisitions come to the holdings board, both the portfolio board and the holdings board will do annual reviews on these acquisitions and report same to the group CEO, to the holdings board as well in every board meeting. Just generally where are we with the acquisition. So to Gervase's point, we don't have a bite size that is too big or too small or this is a number. That's not really it. It's really about how are we integrating these businesses, how are we taking on getting the value out of the businesses. So for me, I would say in the gas products portfolio, we have two massive transactions, 140 million, 50 to 57 million US dollars. In Trinidad, I would say, I think we could have another acquisition tomorrow. And it's for $57 million. Because that business it's our business. It's like, so it's a backward integration into actually running the production facility that provide us our oxygen and nitrogen.
Right.
So that's something that we just simply need to get a handle of the facility, the actual plant, and get that routine of the maintenance of the plant. If we see an adjacent business that makes sense for us, that's something to take on. In Jamaica, if you think about Jamaica and what we're doing, we're becoming a dominant player in the market, adding our current gas flow business to the blue gas business IGL. And that synergy we really need to figure out. And I think that if you look at the size of the businesses, it's going to take us at least 24 months to figure out, how are we going to take the first layer, but then really the bigger picture of taking the business and creating one massive business that is transformative for Jamaica and people of Jamaica and giving them the best value, because that's what this is about, creating more value for everyone. I guess the last point on that is gestation period. I love that word, because new acquisitions, and if we're looking at transformative acquisitions, as we get bigger, we'll be looking at good-sized transactions, right? These take 12, 24, sometimes even more months, So there's a point of us identification. You need to identify opportunities. You need to scout. You need to build relationships. There's a gestation period to get someone from, this is my business, I will never sell it, to, I think it makes more sense for me to sell it. And you're the parent. Most people, they love their business and they want to hand it over to someone who they think will carry on the legacy. So that gives us that level of breathing room to do both.
Okay. What I love about the answer that Gervase gave is that, even though Massey is celebrating 100 years, most people say that's a long time, but you guys are still aggressive, still looking to grow. So a question I'll throw at you, David, with the expansion, global expansion being top of mind, how much does ESG factor into what you guys do in your acquisitions currently?
ESG. ESG is a big subject. That's a big subject. Some of the businesses that we're in, particularly automotive, where is really moving and changing and moving to electric cars, is moving to trying to be sustainable as an industry,
right?
Because it certainly wasn't in the past. So there's a lot of from the G side of it, the governance side of it is really critical. I'd add to Vaughn's comment is that it'll take, acquisition should take as long as you need to understand to make sure you're not making a mistake and two, you're not paying too much. So it really is as long as it's necessary. And that whole governance and discipline is really critical to the process. I think, I know Gervase would have much preferred this question because the whole social context of who Massey is really a critical part of our expansion strategy. When we went to Colombia, Massey actually translated sometimes in Colombia better than it did in the Caribbean. The way we treat people, the way we behave and we create a family type atmosphere in our organization, the way we support and give young people the ability to do what they do well, it really translated in an amazing way. And then there's a whole element of us being a force for good, being an organization that is not only doing well for ourselves and our shareholders, but doing well for the societies in which we operate, doing well for the people who work for us, doing well for their families. And those are the kind of conversations that we have every day. In the context of where what So we take those things into consideration when we're moving into a new territory, a new business.
Okay.
You know.
That's good. That's good.
I have one example for you. Talking to David about what David spoke about. Just juggled something in my mind. I went to Colombia last December. My gas products team. And when the CFO had, I said, you know what, I haven't been to any of our car dealerships. I went to Medellin, to one of our dealerships. And one of David's employees picked me up. One. And what he told me, he took me to breakfast that morning. Like early flights, he took me for breakfast. And his conversation with me, first thing he told me is that I love Massey. And our purpose is in Massey is a force for good, creating value, transforming life. And he said, Massey transformed my life. Where I am today, I would never be without Massey.
Wow.
I've worked all over the world. He moved to Australia to find work. He did auto mechanics. He was a chef. He was busting tables. He moved all over Colombia. He was in Cartagena last. He hated his job. He always had a kind of adversarial relationship with his employer and himself. He actually left and came back home to Medellin. Massey allowed him to be home and to love what he did and promoted him in just, he was like, once like, I would play for like 3 years, he runs our Volvo dealership. So, and you just get that across the business in Medellin. It was infectious. So much that I invited their CEO to talk to my leadership team last Friday. But when you come to the gas products business, we go to our 4 hours away from Bogota, we have a filling station, you get that. And it just, to David's point, is a recognition that what we bring as Caribbean people, the love, the gentleness, the passion, the fun of it, the family type atmosphere, it works anyway. And it crosses language barriers as well.
Definitely. So I want to move into now. So since we're on the topic of now, there's a growth for Massey, kind of get into a little bit of the details. Is there a pipeline right now that across the portfolio companies you guys have in mind that you're thinking of doing? Maybe you guys thinking of doing 2 more acquisitions this year, or you have a pipeline target of growing the portfolio companies to a particular size. Is that something you guys have in front of you that you're working on currently? And when do you think that you'll be able to, fully achieve the target that you guys may have?
So just to be very careful, right? There's something called material non-public information. Right?
Correct.
So venturing into that that area right now. Yeah, of course we have a pipeline, right? Of course we have a pipeline of opportunities in each of the portfolios of things that they're working on. Vaughn talked about the gestation period. David's been all over with people, countries in Europe, United States, other countries in Latin America and Central America. So definitely all of the portfolios have a pipeline of initiatives. We don't like to talk about what we're working on outside of school because we don't know if it will mature. As Vaughn said, you're talking to people who maybe never considered selling their business, and now we're approaching them, the conversation's going along, then something happens and they don't want to sell anymore. So it doesn't make sense to talk about stuff that you're working on with such great uncertainty. But for sure, there's a pipeline that we are working on, and we're also working on filling the pipeline. And that's kind of like David O'Brien's job now. Is, everybody had a pipeline, but now how do we overload and supercharge that pipeline, both in terms of being able to identify opportunities, but also to build a stronger relationship, and a stronger capacity to process and go through these things with, many of them in series, because, we tend to do them more serially.
So one person I forgot to introduce was my esteemed colleague, Awa Muirhead, who's the manager of investment banking at Barita. Now, the reason why I highlighted Awa now is because one of the key questions that most parents would be asking, that the pipeline, as you have described, not necessarily from a figurative perspective, but we can get a picture of a global expansion. Capital is going to be needed, right? Is there any contemplation now, of course, no material disclosure, but is there any contemplation now in a rising interest rate environment, you're taking into consideration your weighted average cost of capital, your different capital mix between equity and debt and any quasi form. Are you guys looking to do any form of capital raises to support your acquisitions within this year or the next 2 years? And what form, if you can say, would that take?
You're good boy. So I'm going to kind of go back a little bit in your question, just to note that after 2019, we made that decision and we decided what we would focus on because we knew this is where we had competence, this is where we had scale, this is where we knew we could actually grow it. We got into divestment mode, and Vaughn actually led a divestment initiative.
Mm-hmm.
And from that divestment initiative, we raised we sold equivalent of $270 million US dollars of
Right.
assets. 175 million of which we were able to get in US currency, which we've invested overseas. So we had some reserve from which to go do some of this hunting. In December, we announced 3 acquisitions. The sum of those 3 acquisitions about $240 million US dollars of acquisitions.
Right.
We haven't spent all the money yet because, they haven't been approved. So the 2 that Vaughn has in his portfolio are still pending completion.
Mm-hmm.
We will use approximately $128 million of the cash that we have overseas to fund the equity part, and then we will use debt. And we've been out to different lenders to secure the debt for these transactions. So the financing for these transactions is fully arranged.
Mm-hmm.
So, okay, that will leave about $50 million of cash that we have access to. Plus, our debt to equity ratio is now 25%. After these acquisitions, we'll probably move to 4%. So we have some debt capacity in the balance sheet. So I'm just trying to help you understand.
The train of thought that goes into it.
Yeah, so we don't have a immediate, urgent need for additional capital. The group is extremely well capitalized and cash rich, but we are investing that cash. We're taking on more debt to fund these acquisitions. So now operating with quality, we interact say is long eye, thinking long term, right? And recognizing there is going to come sometime, maybe 18, 24 months now, where having raised some additional capital might be very useful.
Okay.
So what we're doing in this trip is we're talking to people to understand appetite, get some counsel, how things work. What would people be interested in? What would people be attracted to? Different structures of mezzanine financing, equity financing, rights issues, APU. So we exploring the options.
Oh, that's why I keep our close by.
Right. So right now we're in an exploration of options mode.
Okay.
And at some point in time we will say, I think I know what we can do here. And that's when we would say, okay, when we signal to the market that we want to do something specific, and we have an excellent a group of friends here at Barita to help us, with that process.
Okay. So I mean, just to accommodate all ranges of individuals, a lot of people view the stock price, especially in Jamaica, they view stock price very closely. Companies will perform very well, but not necessarily be reflected in the stock price. Give us your give us your insight. Speak to the wide range of investors. What is your view on those kind of dynamics where a company like yours has shown magnificent growth, strategic acquisition that are going to grow the value creation from the shareholder perspective, yet it may not necessarily be reflected in the stock price? How do you look at a dynamic like that?
Yeah, well, so I will reflect very much what we said, what we were talking about earlier. So as far as we're concerned, what we can control is the creation of shareholder value. We love when the share price reflects that, and the total returns to the shareholders are significant because the share price moved and they had a dividend, etc. So that looks and feels good. But why we created this investment holding company distinction for ourselves is to bring a level of discipline to how we think about what our shareholders' capital is invested in. So we are looking for businesses who can meet return thresholds that we've set for ourselves. And that bar will continue to drift upwards because, we still have quite a bit of things that are still pulling us down. We have land that we don't have any income on in Barbados. And, when you do some of these acquisitions, there's a debt component. It takes a while before you hit your sweet spot. So we see a lot of room for improving the return on invested capital, return on equity in the group. And I would say we expect that, informed investors will recognize that this is a good share and will want it in part of their portfolio. And that the price will
reflect that.
We long-term price tracks performance. The anomalies of a big disparity between your performance and your share price, they don't last that long. There's something going on, like here in Jamaica, being told, okay, well, because of what's happening in the world and the US, the inflation and the interest rates that are going up in the US, and you have to follow it in Jamaica. There's competing debt instruments whose returns so significant at this point in time that all of the equities are suffering. And we've been told that don't feel bad, you're not special, right? Which I think is a great quote. All of the equities in Jamaica have been experiencing a punishing period, and eventually there will be recovery. So we want to sweat the fundamentals. In fact, I tell you one thing. We don't even chase profit anymore. We obsess with good strategy. We obsess with working well with our people and giving them the autonomy and authority to participate in decision making. We obsess about making sure our customers are well served. And it turns out that when you do that, the businesses are more profitable. Profit is calculated in our business 5 days after the month end. You can't affect it anymore. The month end.
True.
So what you can do is you can affect what are we doing to book car sales this month? What are we doing to change the mix of product that we're selling and expand our export base? That's our people. We tell them we're trying to get these things done strategically. And if you give people enough autonomy and participation, they come up with much better ideas. They're much closer to the action than we are.
Okay. So I mean, just on that,
A little controversial.
I know.
On the podcast, we sweat the inputs. That generates the profits. That affects the share price. If you're obsessed with the share price and you forget about the results and you're not working on the inputs, you're not going to achieve long-term success.
That's directly from the CEO right there, guys. So that's a good bit right there. So one final question I want to just involve everybody on, is that in 2019, you guys did a bit of culling up for the group. You cut off all the dead weight, looked at your ratio to see which one's creating more shareholder value. Is there any insight right now that you could share that would say, okay, maybe we consider adding a fourth portfolio company outside of what is there now? Is there any consideration to that, especially as you think about global expansion?
I just want to make one correction. Not all the companies, they weren't dead weight. Some of the companies that we sold were very good companies. Really good companies. They just weren't in our strategy going forward.
Okay.
The best parent.
Okay.
We were the best parent for that company.
A good example is the technology business, Massy Technologies. We sold the PBS from Jamaica.
Right, I remember that.
That business had a very high return on invested capital. That was not on the outside edge. But we didn't think we were the right parent to grow it. So did we have competence in the English-speaking Caribbean? We had very good and strong competence. Did we have some scale in it? We had scale in the markets we were in. Did we feel that we were the right ones to grow it into Central America and beyond? No. So actually, that was a business that when we divested, we actually, got a fairly good return for it. And so now we've taken the capital from that business, which we didn't think we could grow. We're buying gas businesses, we're buying supermarkets.
That you're more comfortable with, you can
we
grow.
We have legs to really grow.
We sold some companies that some of us love dearly. That's a different. But I do want to address that point about whether there would be a fourth. When we find that we can't grow the three portfolios we have anymore, we might consider a fourth one. But why would we if we can continue to grow? continue to develop, continue to expand into new countries, continue to expand those existing portfolios, which is the strategy that we've adopted. You know, where would the fourth one come from? What are we really good at? Because we're just going to get better and better the companies that we have. And our people are going to be in that. Our people are going to be committed to those companies. So it would, unless you know the investment holding company decide to buy a particular industry, and so we're going to start that and then take it to the world.
Oh, okay.
I mean, strategy evolves. We are here in 2023 with a different strategy than we had in 2011 or 2013. So, yeah, strategy evolves. I can't tell you that but I can tell you this strategy we have. We're going down the road with these three portfolios and we're feeling good. We know what we're doing, and we have great people, and, you know, if that kind of pans out to something else in the future, great, we'll tack. But we feel very confident about the strategy we're on to right now.
It's very good to know that, you know, you have a CEO and just an executive team that really understands the core of what drives a business. I mean, at the end of the day, it's really the social, I said the people, which are the inputs, and then you speak about shareholder value creation, which at the end of the day, just growing the business and focusing. Not many people are willing to focus on what their strengths are. So I mean, that's also very, very comforting to know. I say that
it's easy to get distracted, you know. It's easy to get distracted, and distraction has huge costs. You don't appreciate how much distraction costs until you focus.
True.
that's some good insight.
And the big opportunities that we have runway. There's a runway ahead of us that is massive. You know, and to David's point, you know, we will come up point of maturity. And then we'll say, okay, what's next? What's next?
100 years and not mature yet, that says a lot. That says a lot.
Of course.
You know, I do want to make that point. You know, in sometimes a 100-year company, people might say, well, that company is old and unstable.
Right.
But Massey really is in a new energy.
Yeah, growth phase.
And our people are so young and enthusiastic. I mean, the people who work for us, our executive team is, other than me, is young, you know, exciting group of people, and so it's not like a bunch of 100-year-old guys, you know, in this space. It's young, enthusiastic, highly motivated executives taking our team forward.
I mean, I couldn't have asked for any more insight on that. I mean, it really gives you an idea of who are the leaders behind Massey, the train of thought. I mean, you guys are well versed in the different portfolio companies. You even have a handle on the market, which I'll credit Barita, you know, guys guiding you.
Yeah,
so I mean,
There's one thing that wasn't mentioned though, Massey Finance and the input that Massey Finance have for the wider group. I think that's very important.
Yeah, you want to talk about that?
Yeah, man. So we talk about the portfolios, and then we have a few strategic businesses, and we have the Massey Finance business unit that are real catalysts for growth for us. They are really there as impetus to support us with our growth ambition, both in the remittance businesses and our banking business, Massey Finance GFC. And we see them as real catalysts for us to continue growing our businesses and, you know, having us access the market. So a lot of our treasury work is done through Massey Finance GFC. A lot of the challenges we have in the US, you know, we've really been able to manage that well in our businesses in Trinidad. And that's supported by Massey GFC and Massey Remittances. So really a catalyst to support the growth of all of the portfolios.
Oh, wow. Nice. That's...
No, I think that was perfect.
I think it's important for you guys to understand Trinidad and Barbados foreign exchange is not an easy thing to put your hands on. So that's something you have to adjust for.
Correct.
I mean,
so I wanted to say something about 100 years.
okay.
I can go back.
Definitely.
So you could look at celebrating 100 years, you know, it's been a long time, you've been around. But first, there's a real beauty of it in our history in the Caribbean. And really the start of a new century.
Perspective.
If you go back to, I think 100 years ago in 1923, that's before the Great Depression, before the Second World War, the Korea crisis, before we got independence, before all of the different things that you all had in Jamaica, we had Black Power in Trinidad, before all of those things, these two companies came together, Neil and Massey, now Massey. So we journeyed through a long history here in the Caribbean. If you think about our history in the Caribbean, you know, we were colonies. Kind of ruled in a colonial style, that top-down command and control. But we always had flair, right? You know, we always had our own kind of thing going on, right? And so what we see Massey as 100 years in is this, I would call it, majestic tapestry that represents the Caribbean and the best of the Caribbean. We've passed through, you know, wars, colonialism, post-colonialism, independence,
Financial crisis.
COVID. And we're a collection of all the people who have been here, on whose shoulders we stand, all of the acquisitions, all of the different cultures that are integrated into who we are as a group of companies. Our Colombians are now part of us, the Guyanese, the Jamaicans, the Aleutians, the Bajans, the Trinidadians, the Americans. This amazing tapestry and the culture of loving people and appreciating diversity, it really sets us up for what's the next 100 years going to be like. And our grandchildren who will either, you know, buy stuff from or work at or be influenced by the sphere of influence that this now global group has, built on real Caribbeanness. So that's why we see in our vision a global force for good and investment holding company with a Caribbean heart. That Caribbean heart is all of us, embodied in a company. Me and Marty talk about having, you know, Caribbean confidence. That, you know, in Jamaica, in track and field, you know, beauty pageants, okay, we punch above our weight.
Yeah.
Right? In so many ways we can punch. Let's show them punching above our weight in business. And have a corporation that represents who we are. Punch above its weight on a global stage. So that's what I wanted to say about that.
That's definitely why everybody take away. So I want to say thank you, gents, for having this exclusive interview with the Stocks and the Rocks team. Thank you for accommodating us, and I mean, I'd like to see what they get in the next 100 years.
Thank you. Just to say, we're not on the rocks. We're not a stock on the rocks.